Hello, dosto. So we are in the month of May. I want to give you quick updates as to what kind of things are driving the market right now, because last week I posted a video talking to you guys about what kind of numbers I'm watching out for, what kind of data I'm paying attention to. So now we have some of those numbers. So I'm going to share those with you and talk a little bit about the state of our economy. But I want to start out with a major question. Somebody asked me today that, sometimes when you're talking, it sounds like, there's a lot of fear, and most likely market is going to crash. And I think I disagree with that. See, typically, when you're fearful, that means you're careful. And when you're careful, you're going to make the right decision. You're not going to be risky. You're not going to close your eyes and invest. You're going to evaluate everything and make the right call, or at least try to make the right call. It's the exact opposite of what crashes the market. So what is the exact opposite? It's the greed. When there are a lot of people who are greedy, when people are borrowing money on margin, when people are putting all their eggs in one basket, when people are not, they stop caring about what the valuation of companies look like or the indexes looks like, and they just continue to invest. And most importantly, when people start to ignore the fundamentals. When people start to ignore the fundamentals and just continue to invest because of some belief, whether that's political belief, whether that has to do with some other event that might be happening in a market, or maybe it's just a new shining star people are trying to chase. And when they start behaving like that, that is when the market crashes, because that's when the bubble goes really, really crazy. So it's not the fear. In matter of fact, if you take a look at the index right now, the greed and fear index, you will see that market is not fearful at all. In matter of fact, the fact that we are able to recover so fast from 10% decline we just saw a week ago, that tells me that people are not fearful at all, even though the gauge shows that people are fearful, but obviously they're not. I think there's more juice left in the market, and that is what driving it right now. All right. And when people run out of that juice, when those people actually become fearful, that's when the market will start to crash, because that's when they are going to start taking their money out. And for most of us, that is probably going to be too late. So that is what I see in a nutshell happening in the market. So you might ask me, well, why are people greedy right now? What's the reason? Well, I'll give you a few. I think the number one is the bias. The bias of you remember, at the end of the elections, you saw how crazy the market got. Like, people were start pricing in that, President Trump is going to turn this world around and we are going to see a massive rally like never before. Okay, what was that? It was based on what? What was going to happen in the next 2 months or 3 months? What were people really expecting? I thought market will be okay by the next year. I didn't expect it to do like 20%, 30%. I thought, most likely we're going to do 8 to 10% in 2025 as far as S&P 500 is concerned. That was my expectation. But I talked to a lot of people who were expecting it to do 20, 30%. Some people even said 50% because President Trump is in office. Now, that kind of affinity, that kind of trust because of political reasons is very dangerous, right? Because we cannot think like that until we have some facts. Because a lot of things can change. For example, some people gave me a reason was, hey, tax cuts. Okay, tax cuts is positive, but we need to figure out what kind of impact is going to happen on the market. That means how much more discretionary income people will have left in their pocket to invest. Most of those tax cuts actually apply to low income people. Those people don't invest in stock market, or at least they don't have enough to invest in stock market. So is that going to really drive the market? Most likely not. Okay. Similarly, there were other reasons related to tariff. Is tariff going to bring the manufacturing back into the United States? Maybe one day. It's not going to happen overnight. Maybe some more people get encouraged to start a business in the United States, but even that takes time. If I need to open up a factory, I need to, find a land, I need to build the building, I need to secure supplies, I need to find right people to work for me. I mean, it takes a lot of time. It's not going to happen overnight. So people who are expecting that because of that, market will rally, again, doesn't make any sense. Okay, so that's one reason why market is rallying, and the second reason people believe is that President Trump has ability to manage things in the market, and I don't blame them because he did manage. Remember when he came out with a tweet and he said, "Hey, time to buy is now," or when he said, "Hey, I'm going to put a pause for 90 days on tariffs." Or when he says, look, I think last week, couple days, I heard, there will be big news on tariff. Like even today, early morning, I heard there's going to be big news on tariff. I haven't heard it yet, so we don't know. And then every now and then you will hear something like, we already made a deal with China, or we are in conversation with China. Or obviously, China, on the other hand, is denying that they're having any kind of conversation with the U.S. and so forth. The point is that every time market drops, there is some new either a post through social media or somebody comes out and says something, and that's what gets the market up. So I think people are starting to believe that this president does not want the market to go down. And honestly speaking, if you guys remember, I said the same thing about a month ago, that I don't think President Trump wants this market to go down, and he's going to do everything in his power to manage it. But the problem is, you can only stress things so much. At a certain point, you're going to break it. Like you won't be able to manage it. So I'm going to go through some of the important things that I'm seeing in the market right now that can help you evaluate for yourself as to how much risk you might be taking on. Okay, so let's start with what is really driving the market right now. Well, number one factor that is driving the market right now is earnings. The big tech, for example, Alphabet, Meta, and Microsoft gave us great numbers. People are really happy with them. On the other hand, Apple and Amazon are a little bit behind. People not so happy with them. But, these big tech companies are a large part of S&P 500 and QQQ. And that's what's driving the market. So that's number one. Number two is the Fed rate cuts. If you go and take a look at what are the market expectations at this point, people are expecting 4 or even 5 rate cuts within the next 12 months, which is very interesting because all the economics are saying that all the policies that we have in place today are all pointing towards an increased inflation. Obviously, the administration disagrees with that, saying that, hey, that's not going to happen. But at least from a financial point of view, they're saying, hey, that's how the world works. In matter of fact, we saw just a couple of days ago when Amazon came out and said, hey, we're going to add another line item showing you the impact of tariff on each product so you can see how much it's costing you. But then I guess President Trump and Amazon worked that out. But again, see, there is that Trump put, right? Trump is able to step in every time he sees something not going in his favor. So I don't believe people believing that Trump can save them. So that's number one. And number two is this inflation problem, right? What will happen with inflation? Is Fed actually going to be able to reduce the rates? I mean, so far that looks difficult. But what happens if unemployment starts to rise? And that is already happening. I think I have some numbers here. Let me pull that up for you real quick. And we'll have more numbers, I think, tomorrow as well. But the right now, unemployment initial claims went up by 18,000, so 241,000. And New York, just one state on its own, accounted for about 15,000 of those. So about 3,000 elsewhere. So it's not so much problematic right now. But I think in next few months, because I've been reading a lot of reports from different companies, and in their guidance, they're talking about, hey, we're gonna put a hold on new hires. We're not going to spend a lot of money. We're gonna kind of assess the damage, see what's really happening right now. So I think the next report might actually look ugly. And at that point, what would Fed do? I mean, that's an interesting one. Would Fed actually reduce the interest rate and let this market rally? And let's say if it rallies, it goes all-time high again. And at that point, what do we do now? Like if the inflation comes back, then Fed say, hey, all of a sudden we have to increase the interest rate. That means we get into even a bigger crash. So you see, it's starting to get a little bit of a very tricky situation with Fed's inflation and unemployment. They need to manage kind of both at the same time, and that's where we're going to see a lot of problems. Let's take a look at some of the other numbers. For example, I think I talked to you guys about the consumer confidence index, CCI report, right? That fell to about 86.0, so 86 point basically in the month of April. This is the lowest reading in the last 5 years, the lowest. And typically at this point, we should be in recession. So that doesn't really look that good. If we take a look at the manufacturing sector, April PMI report also slipped to 48.7. Anything below 50 is not good. And this is the second month, if I'm not wrong, the rating is below 50. So that also doesn't really look that good. If you take a look at the new orders, or you take a look at the employment subsection in that report, they're also below 50. So they are also looking really risky. Now, we did a lot of imports in the month of April, obviously to deal with tariffs and all that, because if I understand this correctly, the way they do it is they look at the date when the shipping container leaves a certain place. So for example, let's say China, and based on that date, they kind of calculate what happens. So I think a lot of people ordered whatever merchandise they need to order in advance to get ahead of tariffs. So that way they have at least something for next 2-3 months while they figure out how they're going to deal with the supply chain. So we did certainly do a lot of imports. That's what helped, well, not really helped, but made the GDP look a little bit not as good, But more important is not really something to do with import, but exports. Our export actually dropped the lowest level since 2020. Why are people not buying U.S. goods? I mean, in matter of fact, if you take a look at dollar has dropped a lot. So when dollar drops, it's easier for people to buy U.S. goods, but people are not buying. So what does that mean? Well, it could mean that globally, perhaps we are running into a recession, or at least a decreased demand, or are people simply just not happy to buy from the United States? So that's another number we need to kind of pay attention to. So that's what I'm seeing in the market. Are we approaching recession? I don't think so, not yet. But I think we are on the last leg. I think a couple more things break and we will be there. So we have to be very, very cautious. And like I said, this market is purely driven by greed at this point, because nothing fundamentally has changed. We do not have the resolutions for tariffs. We do not know what the impact of those tariffs is going to be on our economy. We do not have the tax policy so far. We don't know what the Fed's going to do. So, I mean, we don't have any new information, and market is running like all of those issues are resolved. And that is what bothers me the most. I want market to rally, but I want this market to be healthy. That's the way I can make a lot of money in it. But right now, market is at a junction where I can also lose a lot of money in just blink of an eye. And that is a little bit worrisome to me. So anyhow, I hope you find this information helpful. Subscribe to the channel, and if you like or don't like any information, then leave it in the comment so I can improve myself next time. I'll talk to you guys soon. Bye-bye.